A $95 billion valuation is a massive structure to build. But when 86% of the revenue is tied to a highly scrutinized foreign geography, the foundation can collapse with a single regulatory pen stroke. On May 14, 2026, Cerebras Systems went public. This listing marks the end of the speculative phase of artificial intelligence, where companies bought chips simply to experiment. The market is now demanding industrialized infrastructure. The mechanics of the debut were staggering. Driven by massive institutional demand, the underwriters revised the price target 3 times, eventually clearing at $185 per share. By selling 30 million primary shares, Cerebras raised $5.55 billion. The morning the stock began trading, prices surged. The fully diluted market capitalization briefly crossed the $100 billion threshold, before settling at roughly $95 billion by the close of the first session. Yet this Wall Street victory relies on a highly concentrated customer base. Cerebras generates the vast majority of its money in the United Arab Emirates. Specifically, 2 entities based in Abu Dhabi, MBZUAI and G42, account for 86% of the company's total revenue. This creates a severe asymmetric regulatory vulnerability for anyone holding the stock. To justify underwriting an IPO with that level of geographic exposure, institutional investors looked at a different metric, a contracted backlog of remaining performance obligations totaling $24.6 billion. Wall Street is not treating this like a traditional tech stock. They are underwriting a multiple of 48 times annual revenue against that backlog. And they are doing it because Cerebras has successfully broken an 80-year-old manufacturing rule to build its hardware. Since the invention of the microchip, the industry has manufactured processors by dicing large silicon wafers into individual smaller chips. Those small chips are packaged and wired together on printed circuit boards. This diagram illustrates the von Neumann bottleneck. AI speed is severely limited by the power required to physically move data between compute cores and external memory. Cerebras solved this by refusing to cut the silicon, allowing data to flow instantly across the unbroken surface. By eliminating the external wiring, this architecture achieves 21 petabytes per second of on-chip memory bandwidth. The Wafer-Scale Engine 3 is a single monolithic processor the size of a dinner plate, housing 4 trillion transistors and 900,000 AI-optimized cores. Manufacturing a chip this large was long considered impossible because of defects. A single microscopic flaw ruins a standard small chip. On a full 300mm wafer, a flaw is practically guaranteed. Cerebras bypasses damaged sectors using a software-defined swarm fabric that simply routes data flows around broken microscopic areas. Thermal expansion presents another physical constraint. Silicon expands when it gets hot. If you rigidly solder a 21-centimeter slab of silicon to a motherboard, the resulting thermal expansion will physically shatter the wafer. To prevent the processor from cracking, engineers designed multi-layer flexible connectors that maintain continuous electrical contact while absorbing those microscopic expansions and contractions. By refusing to shrink the hardware, Cerebras bypassed the physical limits of parallel processing, shifting the advantage in AI computation toward hyper-fast, continuous, sequential flow. Cerebras is not trying to replace NVIDIA's GPUs in the data center. NVIDIA retains an iron grip on parallel model training. Cerebras is executing a targeted strike solely on the AI inference market, the stage where a trained model actually generates responses. As frontier AI shifts toward complex reasoning, using models like Llama 4, the inference workload requires a highly sequential chain of thoughts. This sequential generation is heavily bottlenecked by memory transfer speeds, which perfectly aligns with the high-bandwidth design of the Wafer-Scale engine. This introduces the crucial new metric for AI infrastructure, the watts per token ratio. This chart compares Llama 4 inference performance. Cerebras generates over 2,500 tokens per second, easily outpacing NVIDIA Blackwell's 1,000. But speed is only half the equation. The Cerebras architecture achieves this 2.5x speed advantage while consuming 1/3 less power than the GPU alternative. Global power grids are rapidly becoming the absolute limit for scaling artificial intelligence. In a constrained energy market, the ability to produce more computational output per megawatt serves as a massive technical moat. By lowering the electrical cost and time required to complete a complex thought, Cerebras makes high-speed reasoning AI agents economically viable for widespread enterprise adoption. That underlying physics explains the engineering triumph, but understanding the $95 billion public valuation requires decoding a highly complex piece of financial accounting. This balance sheet highlights $510 million in revenue and a reported GAAP net income of $237.8 million. But that profit is a mirage, driven by a $363.3 million one-time non-cash gain. Removing that exposes the company's core operating loss. In reality, the operational deficit widened to nearly $146 million as the company poured cash into manufacturing and research for massive new contract obligations. The source of that revenue highlights the Abu Dhabi concentration. Relying on two entities for 86%, they are forced to compete for limited factory capacity against entrenched giants like Apple and NVIDIA. The company is effectively a guest in TSMC's factory. If they lose their allocation spot or an export license is revoked, the technical advantage vanishes instantly, and the $95 billion valuation collapses. Cerebras leadership understands this geographic gravity. To de-risk the company, they are aggressively pivoting to secure high-volume, US-based hyperscaler revenue. The anchor of this pivot is a master relationship with OpenAI. Through 2028, OpenAI has committed to purchasing 750 megawatts of inference compute capacity, a contract valued at over $20 billion at full expansion. This is a deeply integrated alliance. OpenAI received an 11% equity warrant in Cerebras, giving them a vested financial interest to co-design future hardware optimized specifically for next-generation reasoning models. In the cloud sector, Cerebras secured a landmark partnership with Amazon Web Services. This marks the first time a major hyperscaler has integrated third-party Wafer-Scale hardware natively into its own data centers. This flowchart illustrates a novel disaggregated inference architecture developed specifically for this integration. When a user submits a prompt, the parallel compute-intensive prefill stage is routed to an AWS Trainium block. The sequential bandwidth-heavy decode stage is then offloaded directly to the Cerebras system, maximizing the efficiency of both chips. This architecture effectively turns AWS into a global distribution arm, providing Cerebras with a highly scalable, frictionless path to thousands of enterprise customers already operating in the Amazon cloud. Zooming out, the Cerebras deed serves as the initial stress test for what the market is calling the 2026 IPO supercycle. By successfully clearing the market at $185 a share and holding its ground in early trading, Cerebras removed the psychological hurdle for other massive private entities waiting to list, including Databricks, SpaceX, and Anthropic. The public market has placed a $95 billion bet that an engineering physics moat is more valuable than a safe, diversified revenue book. The physics of the Wafer-Scale engine have been decisively proven. The only remaining question is whether geopolitics will allow the company to survive.
An investment in knowledge pays the best interest, so why not invest in this channel? Click like and subscribe for more.